In my last video, I went over 2 little known FTMO rules that'll cause you to lose your account. If you missed it, you'll want to click here so you don't get caught in those traps. What I'm going to do in this video is explain FTMO's drawdown rules and why they're so easy to violate. What you'll learn in this video is true for stages 1, 2, and your funded account. For the sake of round numbers, let's assume you've passed the challenge and have a 100K account. There are 2 types of drawdown, maximum and daily. Someone's a brand new trader. They watch a few YouTube videos and decide to buy a challenge. Beginner's luck, and somehow they manage to pass stages 1 and 2. Let's not kid ourselves. FTMO is not going to fund this person $100,000, then turn a blind eye and be surprised when they lose it all. Getting funded is a step in the right direction, but you're still going to be on a very tight leash. Maximum drawdown is 10%, which means at no point in the future can your equity ever get below $90,000. It doesn't matter if you start the day with 120 or 94K. At no point can you cross the $90,000 mark. When we talk about equity, this includes open as well as closed trades. For example, on day 1, your account is 100K. First trade, you lose $3,000, and next you close for a $1,000 loss. You quit the day and your equity on day 2 starts at $96,000. Day 2, you lose $3,000, and day 3, you lose $2,000. You start day 4 with $91,000 and decide to be patient and only take your very best setup. Here we have a very strong bearish candle and enter a short position. We set stop at the open of this candle because if price goes past it, then we can assume we're wrong. Our take profit is fairly conservative, not even close to the start of the move, but still offering a nice 3-to-1. Being confident and wanting to get back to break even as soon as possible, you risk 2% or $2,000 on your 100K account. So far so good. Halfway to our target already. Price almost wicks us out of the trade, but our stop was in a good position and we're still in profit. You were right and hit your full 3-to-1 take profit easily. You risked 2K, so 3-to-1 means you just made $6,000. But if you recall, you started the day with $91,000 equity. FTMO only allows your account to reach $90,000 before you've breached the maximum drawdown. Stop was 2K, so 1K in drawdown would be right here, which you've clearly crossed, even if it was only for a few seconds. It'd be at this point FTMO would close out your trade. The downside profit would have never happened because you'd be out of the market. You think you just made $6,000, but you'll soon come to reality when FTMO notifies you of the drawdown violation and closes your account. On the brighter side, let's say you get your funded account and from day 1 you're in the zone and absolutely crushing it. You're winning almost every day, and before you know it, you run your 100K up to 125K. If you recall from a minute ago, what's the absolute lowest amount your account is allowed to get to? That's right, $90,000, which means we have a buffer of $35,000. After building your account from 100 to 125K, let's say every day for the next 25 trading days, you lose $1,000. Your account goes from 125K down to break even. That would be a tragic losing streak. But from FTMO's perspective, there'd be no rule violation. You're able to keep trading and hopefully turn things around soon. What FTMO does not want to see is you have one bad day and lose more than 5% of your initial balance. With a 100K account, no matter how large the starting balance, You're only allowed to lose a maximum of $5,000 in a single day. As soon as you cross this, your entire account will be locked. In total, we've made $25,000, but today we have a loss of $15,000. This would drop our balance all the way down to $110,000. In reality, FTMO cuts the trade right here. Our ending balance would be $125,000 minus the $5,000 loss. Still in profit $20,000, and I'm sure you're wondering what happens to it in the case of a violation. When it comes to cashing out, you can relax. FTMO is a reputable company and they're not going to scam you. Even though you broke the rules, you're still entitled to your accumulated profit. Tomorrow you can request a payout of $16,000. But if you want to trade with FTMO again, you'll have to pay another fee, pass stages 1 and 2, and then hopefully be more careful with your money management. So far, these drawdown rules and calculations have been pretty straightforward. In a minute, I want to show you a catch to the rules that surprises traders. But first, I have a pop quiz for you. Our 100K account is now 113K. Daily loss limit is 5K. What is the minimum daily equity? We can lose up to 5,000 a day. So 113 minus 5, we can have a minimum equity of 108,000. We started the day with $110,000. First trade we closed for plus 1K, second trade plus 2K, and now we're in an open trade at negative 7,000. Have we violated the daily drawdown? Our account has to stay above 105,000. Right now we're at 106, so we haven't violated. We still have a $110,000 balance, but the order of the trades has changed. This time plus 1K, negative 7K, and we have an open trade of 2,000. Have we violated the daily drawdown here? This would be a drawdown. We're allowed 105K. After trade 2, we dip to 104,000. The open trade of plus 2K would never have happened. Our account would have already been closed. The 100K account has grown to $120,000. How many trading days in a row can we lose 2,000 per day before we violate the max drawdown? Our account has to stay above $90,000, which means we have a buffer of 30,000. 30,000 divided by 2,000 is 15 days. Our balance is 120,000. Daily loss limit is still 5,000. We've closed one trade for plus 1.5K. We've closed the next trade for 2.5K. How big of a loss can we take today and still be okay? We started with a 5K daily buffer plus the 4,000 in daily profit. Our next loss has to stay below 9,000. This time our daily balance is at 92,000. Daily loss limit is 5,000. We've closed one trade for plus 0.5K and then another trade for plus 0.5K. How big of a loss can we take on the next trade and still be okay? Remember, 90,000 is the absolute minimum our account can be at, so we can lose up to 3,000. FTMO uses Central European Summertime, which is GMT plus 2. They give a similar example of a 200K account with a 10K max drawdown. We have closed trades of negative 8,000. We can't have floating losses of more than 2,000. We already know this, but I want to call your attention to a rollover situation you might not have thought about. We have 4K in closed profit, but 13K floating loss. No violation has occurred because 9K loss is currently below the 10K limit. However, when midnight rolls around, the 4,000 in profit is from yesterday, but the $13,000 loss is still happening today, and we'd be in violation. Here's a daily rollover question. Balance is 112,000. Daily loss is at 5,000. Closed trades of plus 4K, plus 3K, and we have an open loss of 6,000. Are we currently in violation? No. The minimum equity is 107. We currently have an equity of 113,000. The 6,000 open loss is canceled by the 7,000 in booked profit. It doesn't stop there though. What happens when the 6,000 loss rolls over at midnight? Yesterday our starting balance was 112,000, but we closed 7,000 in profit, so our new starting balance is 119,000. Daily loss is still 5,000, but we carried over the $6,000 loss. Do you see any issue here? Right after midnight, we would be in violation. Minimum equity is 114,000. We start the day at only 113,000, and we would lose our account. So if you're in this situation, close out the trade, take the loss before the end of the day, and start fresh tomorrow. You also need to be careful when you roll over two positions to the next day. Here we see strong moves down on both AUD US dollar and Euro US dollar. We enter two short positions within an hour of each other. Based on our sizing, let's assume the trade on top is up 5.5K and the bottom is currently 4K in drawdown. So between the two trades at midnight, we're rolling over a profit of 1.5K. You can see by 6 in the morning the next day, our profitable trade crossed back up past break even, and our losing trade is doing even worse. We're allowed 5K total drawdown, and we're currently double that at negative 10,000. Look at the candles for the arrows here around 2 in the morning. On top, we're still 2K in profit, but the bottom trade is over 7,000 in losses. This is where FTMO would have exited the trade and closed our account. Losses are going to happen. It's just part of the game. On the other hand, excessive drawdown is another story. This is typically caused by one of two things: either miscalculating the proper position size or using a mental stop loss and not cutting the trade soon enough. You can kill two birds with one stone and solve both of these problems by using trade management software. I made a video about a free EA for MT4. With a couple clicks, it'll automatically calculate the number of lots, set a stop loss for you. On a personal account, I'm okay risking 2% or more, but on a funded account, I think 0.5 to 1% is better. Another thing to watch out for is correlation between your trades. Let's say you have 4 open short positions: AUD US dollar, Euro US dollar, GBP US dollar, NZD US dollar. If some news comes out about the dollar, this could potentially cause all of them to spike at the same time and push you over the 5% daily limit. Check out my playlist on how to improve your risk management psychology, and watch my video about 2 other things that can cost you your FTMO account. Don't forget to subscribe. Talk to you soon.